Hey guys, welcome back to the channel. I'm Luke, an ACA qualified accountant, and in today's video we're going to introduce the average cost inventory valuation method. I'll briefly define what AVCO is, and then we'll run through an exam style question so you can see exactly how I would approach an average cost method calculation, where you need to either calculate closing inventory or cost of sales for the period. So yeah, let's get into it. Okay, so what is the average cost method, commonly referred to as AVCO? Well, AVCO is a method that values inventory and cost of sales by taking the weighted average cost of all the inventory units that are held at a given point in time, regardless of actually when they were purchased by the business. So AVCO works by recalculating the average unit cost every time a new purchase is made by the business. So this updated average can then be used to value both the cost of goods sold for the period and closing inventory. So what's important to remember is that under AVCO we only revalue inventory when a new purchase takes place, not when a sale is made, so, and also not at the end of the accounting period. Let's see how this works in practice by looking at an exam question. So if you've already watched my FIFO video here on the channel, this data will look pretty familiar. But we're working with the same coffee cup business, same set of transactions, but this time instead of using the FIFO method, we've been asked to calculate the closing inventory value and cost of sales for the period using the average cost method. So let's get started. So when you're tackling an average cost question, I really recommend sketching out a table in your workings that looks just like this. So when you go down the rows, you can see that we've listed out all the purchases and the sales that have taken place in chronological order. This helps us keep track of all the inventory movements that have taken place over the course of the accounting period. Whereas in the columns, we've included all the key data points we need to calculate. Things like total inventory cost, units held, weighted cost per unit, cost of sales for the period. So if you're presented with an average cost question, sketch out a table that looks just like this, follow the method that I'm about to go through, and you can't really go wrong. In our second and third column, we've got our units purchased and our units sold. In the fourth column, we've got the cost of those new purchases. That's all information that was contained within the question, so all I've done is transfer that across. And our job is going to be to populate everything in the 5th, 6th, 7th and 8th columns. So on the 1st of January, we know that we had inventory brought forward of £500. We had 100 units, so that gives us a weighted cost per unit of £5. On the 7th of January, 300 units were purchased at a cost of £1,605. So the total cost of our inventory as at the 7th of January is going to be equal to £500 plus £1,605, which equals £2,105. That's the total cost of our inventory at that date. We have total units of 100 plus 300, which equals 400. So 100 units brought forward on the 1st of January and 300 units purchased on the 7th. Because a purchase has taken place, we need to recalculate our cost per unit number. So we have total inventory cost of £2,105, and we divide that by the total number of units in inventory at that date of 400. So our weighted cost per unit as at the 7th of January equals £5.26. We don't need to calculate cost of sales because that's a purchase date. 7th of January, only purchases were made, no sales were made. Let's now move on to the 9th of January, where 200 units were sold. So we calculate the cost of sales as at the 9th of January by taking the 200 units that were sold and multiply by the weighted cost per unit as at that date, which was £5.26. So our cost of sales as at the 9th of January was £1,053. Total units held as at the 9th of January is equal to our 400 units brought forward minus the 200 units sold, which equals 200. And our total inventory cost as at the 9th of January is equal to the £2,105 as at the 7th of January less the cost of sales, £1,053. So our total inventory cost as at the 9th of January, the cost of those 200 units that remain, is £1,052. We don't need to recalculate the weighted cost per unit as at the 9th of January because we only recalculate our cost per unit when a purchase has taken place. We don't need to recalculate when a sale has taken place. On the 15th of January, we know that an additional 500 units are purchased at a cost of £2,750. So our total inventory cost at that date is equal to £1,052 plus £2,750, which equals £3,802. The total units held are equal to 200 plus 500. So at 15th of January we have 700 units of stock. Our weighted cost per unit is equal to £3,802 divided by the 700 units, which equals £5.43 per unit. We don't need to recalculate cost of sales because no sales taken place. On the 20th of January, 400 units are sold. Our cost of sales is equal to the weighted cost of £5.43 multiplied by the 400 units sold. So our cost of sales as at the 20th of January equals £2,172. Our inventory cost at that date is equal to £3,802 less the £2,172, which equals £1,630. We have units of that at that date of 700 minus 400 equals 300, and we don't need to recalculate the weighted cost per unit. And we carry on with the next purchase of the 23rd of January. Our inventory cost will increase by £1,160. So it's now 2,790. The number of units that we hold at that date is equal to 500. Don't need to calculate cost of sales, and our weighted cost per unit is equal to 2,790 over 500 equals £5.58 per unit. And then finally, on the 28th of January, 200 units are sold. So the cost of those sales is equal to £5.58 multiplied by 200 units equals £1,116. So the total inventory cost as at that date is 2,790 less £1,116 equals £1,674. And we have 300 units left. So at the end of the month, as at the 31st of January, we have a closing inventory of 1,674,000. That's our closing inventory. And we have a cost of sales equal to £1,053 plus £2,172 plus £1,116, which equals £4,341. That's our cost of sales for the period. You need to aggregate everything in that column. And we can perform the exact same sense check that we did in our FIFO example to check that all of our numbers are okay. So we apply the following formula: closing inventory equals opening inventory plus purchases minus cost of sales. That should equal So we know that we have closing inventory of £1,674. We have cost of sales £4,341, and we have opening inventory plus purchases of £6,015. And that holds. So if you have the time, you can undertake that quick sense check to make sure that your answer is correct, and that could give you a little bit of extra confidence in the exam. If you've got time, you can undertake that little check. So cool, that's everything I wanted to discuss in this video. That's the average cost method in a nutshell. If you've got any questions about either FIFO or AVCO, please feel free to fire them off in the comments. I'd be more than happy to answer them. If you like the video, please smash the like button and consider subscribing. I'm making tons of videos about the accounting fundamentals exam, and we'll see you guys in the next one.